Trading weekly stock options. 4 tips you should know. During 2010, the Chicago Board of Options Exchange, or CBOE, introduced weekly options as a new exchange-traded product. This product is similar to standard options, with the only difference affecting the length of time of the option. Weekly options take advantage of short-term movements, without the disadvantage of a potential 4-week time decay. The market has continued to broaden and allows investors the most efficient leverage when looking for short-term stock movements. Weekly options trading is fairly intuitive. The options are listed every Thursday and they expire the following Friday. Weekly options are available on all the usual stocks and indexes, such as the S&P 500 Index, SPX, along with the major exchange-traded funds, ETFs, such as the Financial Spider Select. Weekly options are also available on some of the most widely traded equities, such as Apple, Exxon Mobile, and JPMorgan Chase. The list of stocks and features that are traded regularly change. Information with regard to availability are listed on the CBOE website. Weekly option tips. Trade weekly options when you're looking for a short-term movement in the financial instrument. Trading weekly options have many benefits. The options have a shorter duration than standard options, which expire every third Friday of the month. Shorter dated options will cost less than longer dated options because there's less time value, which generally drives up the price of an option. You should trade weekly options when you're looking for short-term movements in the market. Use weekly options to take advantage of volatility around an economic event or earnings release. Weekly options can be specifically valuable around economic data releases or earnings releases. Because you can keep your premium to a minimum, there's probably no better way to maximize the power of leverage within a generic option arena. Trade weekly options when you need to hedge your portfolio. If you have a portfolio of stocks and options, you might be able to offset some of your exposure with weekly options. You can purchase insurance or short-term protection for your stocks. The cost will be lower than standard options with more than a week till they expire. Additionally, to hedge your exposure to the market, you can purchase weekly puts on the major indices to offset potential losses on your portfolio. Generate short-term income by selling covered calls. You can also sell covered calls on weeklies. Although the income you receive will be less than a longer-term option, your waiting time until expiration will be a lot shorter. Weekly option specifications. The Chicago Board of Options Exchange offers 3 different types of weekly options, along with weekly settlement data and volume open interest information. Some of the options they offer have morning settlements, while others offer PM settlements. Weekly options are traded using American-style exercise features, which make them exercisable at any point prior to the expiration date. On expiration, the buyer has the right, but not the obligation, to receive the underlying instrument. Liquidity on weekly options is robust, with the average weekly volume for the new weekly options increasing above 300,000 contracts by November 2010. Your edge. If you want to know all the ways on how to trade weekly options successfully, check out my digital guide, Discover How to Make Money Each Week Trading Weekly Options, which you can download and read in just a few minutes. It's time for you to stop sitting on the sidelines wishing about all the money you can make, and start learning and understanding how to make money trading weekly options. I'll show you how. Go here for details. The Weekly Options Trading Guide.